Oh yeah, no. Okay, guys, one more time.
And Victoria's mother is in the audience, so let's do it. Bring it on, yes.
Last panel before the start of battle. Okay, guys. Wait. I have the honor of having Chris and Marguerite with me. So, a deep dive into Web3 investing. I hope you're excited. As some of you already know, I'm the founder of EBC. I hope you've had a good time. Now it's time to dig into a little bit more into the Web3 space when it comes to investments and VCs. So Marguerite, she is part of Ledger Cathay Fund, yes, as a partner there. And we have Chris, one of the founders of 1KX. So now I think maybe you can say 30 seconds, a little bit about yourself, and then we're going to dig into how you actually reached to the point where you are today. But maybe Chris and Marguerite say just something a little bit different. So like not the usual things you would say when you introduce yourself, something different. Chris. So for example, I don't know, what was your first, tech gadget back in the days? First tech gadget, I don't know, like the Game Boy or whatever, like.
Okay. Yeah, I mean, first of all, thank you for having me. My first tech gadget, I can remember that I always wanted to have a Game Boy, but my parents didn't want to get me one, so I couldn't do that. But yeah, then eventually, like, I saved enough money, and then I bought a PlayStation.
You bought a PlayStation?
That was my first tech gadget, yes.
Nice one, Chris. Marguerite, first tech gadget?
MP3 CD player.
Nice one. Okay, guys. So let's understand. I think it would be nice for the audience to understand how you got into Web3 investing. So a little bit your history till the point of being an investor in the space.
You want to go? Yeah, so for us, it was a little bit different story, I would say, like a little bit unusual. Before we went into investing or into like blockchain, we were actually founders ourselves, and we were based in Berlin at that point. And yeah, we were doing like mobile applications. And because Berlin had like a lot of like history with like blockchain. So you had like the first place in the world actually where you could spend your Bitcoin in Berlin, and Ethereum was also built in Berlin. So we had a little bit of like touch points, but we didn't really spend too much time there because we were busy with our own startups. That changed a little bit when it was like around, I think, early 2017. At that point, mobile, was a little bit stalling in innovation. Like we didn't really feel like it's the platform, where we can have like the most impact. And so around the same time, Ethereum was going through its first hype cycle. And so we started to look into that. Maybe we should build something on top of Ethereum. And so we've looked into that, but yeah, we are like a little bit more application developers, and yeah, back then it was a little bit too early for us to build something there. Even though I studied computer science, there were like a lot of like abstraction layers missing back then. And yeah, so instead of really like building something ourselves there, a lot of like other talented entrepreneurs were joining the space around this time. And we were in a fortunate position, that we could give them some advice on operational topics, hiring topics, investing topics, fundraising. And yeah, we got pretty positive feedback from those founders, but also from other VCs that they've worked with. And those VCs, they eventually encouraged us to launch our own fund. And yeah, that's kind of, like how 1KX, came a little bit to be. And yeah, this was like a very nice opportunity for us because I can remember as a founder, I was like, like digesting all of like the blogs, etc., from USV, A16Z, and so this was like a very, very nice opportunity. And yeah, we wanted to make sure, right, that we are like also building a fund that is like very differentiated. And yeah, it's going pretty well. Back then, we only started out with 6.5 million. Now we are managing 700 million. So it's been kind of like a pretty nice increase. Like early this year, we've launched a seed stage fund with 75 million, where we're like, focusing additionally like on seed stage investments. And yeah, I think that provides a little bit more than a little intro. Yep.
Nice. So from 6 million to, did you say 600 or 700 million asset under management?
700.
700. Yeah, that's a good growth. Marguerite, tell us a little bit about your background and how you ended up as VC investor.
Yes. So personally, I was actually already a VC investor doing early stage investing in Berlin as well. So I was working for Headline and Cherry Ventures, two Berlin-based funds covering the London market, the French market, and the German market. And then I got into Web3 by actually doing NFTs out of my photographies. So I do a bit of photography on the side. And then I discovered the real benefits of Web3 from a user perspective as an artist, where you get more transparency, more ownership, more control over the fees and the journey of your artwork, and where you remove the middleman of the galleries that don't really make sense in certain models. And I think when you understand Web3 from a user perspective, then you have a different insight than from an investor perspective, where everything becomes a bit more tangible. And so I started with the NFT aspect, but then went a bit deeper into the infrastructure and different real-world use cases. And for Ledger Cathay specifically, it's a bit of the same in the sense that Cathay initially is an investment firm. So we do mostly Series B investing in tech sectors across geographies and across sectors, including Web3. And actually, Cathay started with private equity activities. And then we started the venture capital activities in 2016. And one of our first investments was in Ledger. So that was the biggest line of the first fund. And actually was at the time, it was in 2017, so at a time where both crypto and hardware were not really good buzzwords to have on your pitch deck. And so being an early believer in the company and in the space helped a lot develop a strong relationship with Ledger. And so a couple of years later, we decided to do Web3 funds together and to basically combine the Cathay expertise in the investment space with the Ledger expertise in the crypto space. Ledger being today a pioneer in securing cryptocurrencies worldwide. So you have 20% of Bitcoin holders that hold a Ledger. It's also obviously a big advocate of self-custody. And on the Cathay end, similar trajectory to 1KX in the sense that we started with a fund which was 250 million. And we reached the third fund is a 1 billion fund with which we invested Series B only. And so coming in with Ledger Cathay and raising external money for that fund was a good way to position ourselves earlier on in the journey of the startup. So we invested seed and Series A tickets between 1 million to 5 million. And then later on, Cathay can potentially come in with a 1 billion fund and keep supporting companies like we did with Flowdesk, for instance. Ledger Cathay first invested in the Series A round, and then Cathay invested in the Series B round.
Very nice, very nice. Thank you for introduction. So Web2 builder turned Web3 investor, and Web2 investor turned in your free time a little bit an artist, and then you turned also to a Web3 investor. No, thank you very much for your introductions. So let's dig into the questions, yeah? So lately, I think this is interesting for everybody to know, what areas are you finding exciting when it comes to investment opportunities? Because we all know there is different types of hypes, right? But right now, what's hot? What's relevant?
Yes, I mean, we always try to stay a little bit outside of like the super hyped topics. It's usually like evaluations are like too crazy there, and you know, we want to kind of like we want to, you know, like do some asymmetrical investing basically. What I currently, and I mean, we kind of like invest across like the whole stack, right? You know, like from consumer to deep tech. But what I'm personally pretty interested in right now is, I don't know, like this category of, you know, I would almost call it like crypto fintech. You know, for example, Ledger is maybe like a company in that category. There's, you know, like staking providers, you know, like are in that category. And so there's like a lot of like businesses in crypto that are making a lot of like real money. Yeah, like they're being ignored by a lot of like investors who are just kind of like blinded by tokens at the moment. And so like valuations are actually also, you know, like pretty attractive there as well. So that's kind of like one thing that I like. And another thing that I like is DePIN. So DePIN stands for Decentralized Physical Infrastructure Networks. And basically, like they use blockchain technology to coordinate hardware resources. And so it's, for example, I don't know, like GPU networks, storage networks. You guys are probably like familiar with Filecoin and Arweave. These are like some prominent examples there. And yeah, that's kind of like a super interesting category in my opinion as well. I have like a CTO background, so you know, like I was always, you know, like looking for these kind of like things. And yeah, there you also have a lot of networks that are having real revenues, you know, that are coming almost like from Web2. and are now like embracing Web3 and yeah, to kind of like onboard other node operators to the networks and so on. So that's something that I'm personally pretty excited about.
Thank you, Chris. And Marguerite?
With the fund, we actually so initially we were covering quite a lot of spaces and we refined the investment thesis over the months. Recently, we spent a lot of time on Bitcoin Layer 2. That was a bit before the summer, and we actually decided to place a bet on Bob and Mezzo. Generally speaking, we're looking either infrastructure play, because we do believe that consolidating the technology is going to be fundamental for the adoption of cryptocurrency. And we're looking a lot at how blockchain interacts with the financial asset industry. So either how blockchain technology can help traditional players of the finance industry improve their processes and become more efficient and more accessible. So for instance, we invested in Midas, which tokenizes treasury bills from the US. We are also looking at how processes from the traditional finance industry can be applied to the crypto market. And we are also looking at yield enhancement solutions that are done in a very regulated and compliant way. So for instance, earlier this year, there was a lot of fuss about liquid restaking protocols. We actually ended up investing in EtherFi after having looked very closely at all the different players. So generally speaking, we like to understand a vertical and speak to all the players in that vertical and then decide to understand what is the model that is most attractive to us and look for that specific model. Yeah, and we also put quite a heavy focus recently on business model and revenue generating companies, because actually there are quite a few models that can be quite traditional business models that can very well be applied to the crypto industry and avoid the kind of bubble that we can see sometimes in some token deals.
Great, thank you. Okay, so let's talk a little bit about TradFi and DeFi. So yes, we see, of course, the TradFi space getting closer to DeFi with interest in the technology, in approaching it much more. We've seen that maybe for quite a while. That's one thing. But then also lately, we're seeing kind of like the opposite happening, right? So, okay, yeah, TradFi is embracing DeFi, but now we also see kind of like DeFi getting closer to TradFi. So I know we discussed a little bit this behind the scenes, and I think you have some quite interesting views on this. Chris, at least there was, part of the direction you didn't really agree on, right? You think it's better if TradFi just sticks to DeFi and blockchain technology, but maybe, yeah, elaborate a little bit on what we discussed behind the scenes.
I mean, I kind of like think all of this is like super valuable, and like democratizing access, to ETFs via like tokenization and like stocks, etc., is like a very good thing to do. However, it's not necessarily something that we are looking for like in investments in that area because it's like pretty kind of like tough to differentiate like the different companies there. We kind of a little bit think of it like as like a lemons market. What I personally like find more interesting in that area is actually like bringing yield on chain that is like otherwise not accessible. And so like I think a good example of that would be Efina, right? Which basically brought the yield from the basis trade, the carry trade on chain. And like a lot of people, suddenly were able to just kind of like deposit USDC or whatever stablecoin into that contract, and we're like earning like I don't know 25% yield on basically like these instruments. And there are many more of these types of instruments in TradFi, that retail doesn't have like any access to, and so that's personally like where I'm more interested in.
Yeah, I would second that actually. I think you have very interesting use cases. For instance, even we looked at a space in the private credit space where you can actually leverage the stablecoin that you own and generate a very good yield of up to 14%. And that's it's yield that is otherwise not accessible and that the blockchain allows to make accessible. So this is a particularly interesting space in various angles.
But like, you know, lots of foundations sit on a lot of money. Of course, most of the money they have, or money, is crypto or stable coins. But like, so how do you see that these foundations can get access through blockchain, so on-chain, to a BlackRock fund? Isn't it a bit funny? I mean, like, these, you know, decentralized foundations now getting access to a BlackRock fund.
I mean, I'm not sure if actually like many of them do that.
It's just the beginning.
Okay.
It's just the beginning.
Yeah, I mean, they still need to do like KYC and everything, right? So, but yeah, it's definitely like an interesting area and use case of it.
But it's a bit funky, isn't it? Like, it's opposite, right? I mean, like, we were embracing, like, you know, TradFi getting closer. I mean, I find it very funky. But this is just the beginning, this on-chain wealth management, and I believe we will see much more of it the next 12 months, 18 months. But yeah, let's continue. Okay, guys. So, just a quick note. What about AI? Is there happening anything there, or is it just a little bit of like, woo, but not really real? Tell us a little bit more.
I mean, I think like all of the activity in AI right now, or at least like the usage, is happening in Web 2. There's like very little stuff that's happening in Web 3. And when you talk to the Web 2 AI people, they don't care about crypto at the moment. So I do think that will change, but we're not there yet. And then I'm also not really sure, like, you know, what the specific form factor will look like, you know, like in how crypto and AI can like work together. So, you know, for these reasons, we've kind of like stayed a little bit on the sidelines so far with like all of the deals, you know, that, yeah, relate to AI.
Same for us. It's actually really not a sector we deep dived into, also because we had identified other sectors that we were very bullish on and where we wanted to position ourselves earlier on before the companies that we were targeting became too big and not accessible for an early stage fund. I think for AI, there is a bit of a bubble around it. Web3 is really far away from their core concerns, so this is not where we're seeing most interesting opportunities for the fund. That being said, we had a conversation this week saying that we should probably start looking into it a bit more, but we haven't done so proactively yet in terms of prioritization.
Okay, so it's not real yet.
I mean, we're looking at all of the deals, but yeah, like so far we haven't really seen anything that really convinced us.
Okay, thank you guys. So let's talk a little bit about the community, right? So I guess especially thinking of startups that have tokens. They have a big community on Twitter, Discord, Telegram, and so on. So yeah, there is these discussions sometimes, right, where it's like, okay, community versus the VCs, who is short-term thinking, who is long-term thinking. So what are your views there?
Well, I mean, I do think we at 1KX, we're definitely like, you know, one of some very community-aligned investors. But it's kind of like a two-edged sword, in my opinion. When the markets are great and the token goes up, community and like, you know, retail, etc., can be like a great amplifier. And you know, like things are, you know, like always amazing. But yeah, like when things are like going down, retail oftentimes has a little bit more of like a short-term view, and you know, then they start. Yeah, I mean, like we've seen this a couple of times in our portfolio where the founders are like getting really concerned and worried about like what retail people are, or like what community is like thinking, and specifically because a lot of like the community members, they are like just DMing the founders directly, and so the founders feel like pretty kind of like, yeah, put under pressure. And to kind of like work on some short-term measures to, you know, like improve the token price. Whereas in our opinion, you know, like their energy is like much better focused, you know, on like, you know, working on like some more long-term product things. So that's a little bit the two-edged sword that I'm seeing there.
Marguerite?
Yeah, I would actually second that. I think the crypto is about the community of ownership, and so obviously you have the power that has shifted much more in the end of the community, and the community is having a much more proactive role in shaping the direction that the industry is taking. But that also means that from a business perspective, or actually, it lacks a bit more the business angle, and the business angle comes with longer views and also sometimes a prioritization of product or decisions that need to be made more in the long run than in the short term, and obviously in a very volatile and rapidly evolving market that can have a stronger, the community can have a bit of a stronger impact and also sometimes hinder a bit some of the efforts that the business is trying to implement. That would be the caveat that comes with the economy of ownership, I guess.
Do we have any token holders here? Can you raise your hand? Yeah? Are you putting short-term pressure on the founders on Twitter, Telegram? No?
I mean, it's usually like a very loud minority. It's definitely like not all of them, but yeah, like some of them, they get like really frustrated. The markets overall go down, right? And I mean, like, what can the founder do, right? When a project goes down with that, like everything is super correlated in crypto. So yeah, sometimes it's pretty tough to navigate that.
I can imagine. Okay, guys. So continuing a little bit with tokens. When do you recommend a startup to issue a token, and when not?
This time you go first.
Yes. I guess there are different factors to take into consideration. First, having a clear product market fit, having a very clear positioning, making sure that your token is going to be needed by the community so that you have a certain demand that you can tap into for when you launch. Being very clean on the regulatory aspect, depending on the region where you operate, because obviously that's a growing concern. It varies a lot from one geography to the other. US, Europe, APAC region will have very different restrictions, and you will be operated in much more defined or gray area depending on where your company is based. Clearly define the value that your token will add. I think now it's a bit more healthier, but before, like a year ago, we were seeing a lot of companies that wanted to emit a token just for the sake of issuing a token, and that we were really strongly advising against it, because also it takes a lot of time to define the tokenomics, and it can also kill the value proposition of your product if it's not directly aligned with what you're supposed to offer. So yeah, I guess market readiness, making sure you're tapping into a demand that's there, choosing the right timing as well for, in terms of like where the market is at, depending on your fundraising needs.
And when not? When do you not rank?
Yes.
So
yes.
when do you not recommend?
No,
when not? Because
yeah.
I remember you said, like, at least behind the scenes, you said like a typical SaaS startup, I wouldn't recommend normally. So maybe, yeah, tell me a little bit more there.
It all depends on what you're here to offer to the community. And obviously, if you're selling a SaaS product to B2B customers, then issuing a token is not necessarily going to be the best route for you. But even if you issue a token to raise some funds, then you need to do it at the right market conditions as well.
So is there going to be a ledger token?
Oh.
Is there going to be a ledger token?
Yeah, that's a good question.
I'm representing Ledger Cathay, not... No.
Okay. Yeah, I think like very similarly, right? Not every company needs a token, and I'm saying this when we were like in 2019 we were wearing T-shirts that said "Token Maximalists," so you know we were like really like on the token side. But yeah, like for not every company like a token fits or makes sense, and yeah, then for the ones you know like where it does. It's always like the very complicated question is, you know, like when do you introduce it, right? And it can oftentimes be like very tempting, you know, to just kind of like launch it and then give out some rewards. But you know, the traction that you will see from those rewards is not real, right? So it basically goes up, but it goes down the moment you turn off the rewards. And so it's very, very critical. Also, what Marguerite said, right? That you have really like product market fit first. That you know your product works even without a token, And we always kind of like say to our founders, think of like, tokens as rocket fuel. They're like really can really like accelerate your product. But if there's like no flame, then rocket fuel cannot do anything.
So so if you're a SaaS company, so if you have a SaaS product, don't go for a token normally. And if you don't have product market fit, don't even think about it. Okay, so guys, we are coming to an end, and we have the startup battle finals now. So which is important. We've had 50 startups pitching at our build stage, but before wrapping up, maybe just a little advice for startup founders. Anything they can take home besides everything else you've shared? Chris, Marguerite?
Yeah, I mean, this is always like a tough one. It depends on, really like the founder. I think like overall, it's important, to be willing to go out of your comfort zone. Like nothing good ever, like happens, when you just stay within your comfort zone. So you really need to kind of like be very willing to go outside of that. You need to, you need to be like the face of the project, right? And so, you need to kind of like be pretty good at, like networking and yeah, just, talking to like a lot of people, convince them to use your product. I mean, again, it depends really like, on what stack you actually like work on. It's different for consumer founders, for example, right? I mean, they don't have too many customers, they're having just like a ton of users, and they can't talk to like anybody. So it's a different conversation there. But yeah, overall, resilience and yeah, getting out of your comfort zone.
Thank you, Chris. Marguerite, advices?
Yeah, I would double agree on that, and I would also add maybe be compliant by design. I think it's the right way to start the company. Compliance is going to be a big topic in the crypto industry.
But in the past, it was not like that, right? You would build and then you'll figure out.
Yes, it all depends on where you operate, but actually this can become your competitive advantage as well. So for instance, when we looked at companies in specific space, we were actually much more looking at companies based in Europe that would comply with the European regulation to avoid being caught later on. So you have the US versus the Europe approach. I think at the moment, given the recent moves from institutions, from the SEC and from different institutional bodies, being compliant by design, if you operate in the financial asset industry, for instance, is quite relevant. Obviously, it all depends on your area of interest, and you have kind of like nuances to add depending on your positioning. But usually starting to think about it from day one can be quite helpful in the future.
Thank you. Thank you, Marguerite. Thank you, Chris.
Thank you for having us.
Big
Thanks
applause.
And a big thank you to Victoria. Thank you so much. That was awesome. Absolutely brilliant.